Ladies and gentlemen, absolutely superb that we can be here this evening. I've heard from so many of you already that the next conversation is the one that you are most looking forward to listening to. When I say conversation, what I mean is you're most looking forward to listening to Sergio Ermotti, not me. So I will try and keep my part as brief as I possibly can, and so that you can hear as much of Mr. Ermotti as possible. I'm not going to give you a big outline of what's gone on. If you don't know what's gone on in the last 12 months, then I'm not sure why you're in this room, but I'm pretty sure you all do. March 2023, seismic events, extraordinary events in the US regional banking system, and of course it came very close to home for all of us with the Credit Suisse demise over a period of years, but it suddenly went very, very quickly in March 2023. There was no government bailout, there was no foreign takeover, and actually this was resolved with a private sector deal, albeit, of course, very, very quickly. And all this has been very well documented, but I really want to start off with having a chat with Sergio Ermotti about what's happened, get his view on the European banking sector, and then I'm going to open it up to you all for around about 10 minutes at the end, if that's okay as well. And so just please have a think about your questions as well. We'll try and get in as many as possible. Sergio, good to see you. We've already had a good conversation this year about events as well, where you've talked about your masochism for going back to UBS, a place that you were a very successful CEO from 2011 to 2020. But 2023, and these are your words in the shareholder letter, was a defining moment in the 162-year of history of UBS. It vaulted you into a new league. Just tell us a little bit about the experience. Tell us about March 2023 and subsequently what's happened since, and how you see it as a success and a very exciting opportunity rather than a source of concern that some people in Switzerland still believe is the case.
Well, thank you. It's great to be here. Well, actually, how it was for me more than a year ago, just about a few days or a few weeks, was surreal, because of course I found myself within 48 hours completely changing my own personal life and professional journey. After retiring, I thought that I would be now focusing on my role at Swiss Re as a chairman and do something different. Now things have changed. It was a kind of mix between Call of Duty to UBS to the country, but also because I thought it's out of a quite embarrassing, not ideal, and in some extent also tragic situation, because Credit Suisse had an history of 170 years, was one of the pillars of the modern Switzerland. I thought that we could eventually create something that would make the combined bank even stronger, more successful, and so create something good. So it was a combination, and I was very motivated to contribute, but also to go into a new challenge in my career. So in that sense, I'm very happy that phase one of what we needed to do has been accomplished. Most importantly was stabilizing the clients, stabilizing the people within Credit Suisse. They went through a lot of quite emotional and difficult times over the last few years, and particularly in the weeks before and after the events over the weekend. We got also quickly focused on returning all the guarantees and liquidity facilities that were provided as a way to move forward, and also in a sense showing the strengths of UBS. We started to inevitably also to cut cost, because the integration of Credit Suisse is not just a normal M&A transaction of two going concern units that try to find ways to create even more value by top line synergies or cost synergies. One of them was non-viable, loss-making, and had to be restructured before you start to really look at adapting and finding the right business model. So all that has been done in 2023. Now phase two is very important. We are just about to complete the applications with 70 regulators in 50 countries to be able to merge our operating banks. Very important, so that we can achieve the next round of cost synergies. The first 4 billions were achieved in 2023. We still have 9 billions to go. So it's a combined cost reductions of more than 30%. And then, of course, we can also reinvest back in the business. But in order to do that, we need to basically go first through the restructuring. And then it's going to be a huge IT data migration exercise that will take around 18 months to 24 months. So we're, de facto, we're going to migrate clients into the UBS platform. So by 2026, the end of 2026, we will achieve the same profitability that UBS had standalone in 2022. This gives you probably a sense of what I mean by, when I talk about this is definitely not a sprint, it's a marathon, but most importantly, some people are saying, well, this was the deal of the year, and of the century, actually, not of the year. Well, of course, but it's a prize. It's something that we need to work hard in order to crystallize the value over time.
Sergio, a lot of people say, well, the lessons learned from the crisis are about bad risk management, about bad treasury, about bad external regulation from supranational or indeed Swiss regulators. But I actually want to park that conversation because I think there's a lot looking backwards. What I want to refer to is a conversation that you and I had in Davos, that actually there is a stunning opportunity here. There is a role model for the kind of bank that can actually take on the US banks. You said to me in Davos that actually the biggest US banks were forged out of crisis, were forged out of 2008 and similar kind of crisis. As proud Europeans, most of us in the room want to see European banks on a global basis competing with the big US banks. There is an opportunity here for a role model in the UBS Credit Suisse combine as well. Do you think Europe is brave enough to seize the opportunity, or actually, do you think we're just way too cautious to allow bigger European banks that are potentially too big to fail?
Well, I guess, number one, I think that if we are successful, and I believe we will, and we are as we speak, in integrating Credit Suisse, i.e. two global systemic relevant banks, is going to be a case study to be evaluated globally, but also particularly in Europe, where eventually the necessity of creating stronger banks and stronger and more competitive banks from a global standpoint of view is, in my point of view, a necessity. In order to achieve that, I just had a chance to mention that, also reiterate these comments I made to you. Of course, we can't just rely on a crisis to create or facilitate the merger of banks. I mean, of course, it's good to have strong players that can be part of the solution, like UBS was in the Credit Suisse case. And by the way, as we speak, as of now, UBS of today is the outcome of 520 acquisitions in 160 years. And many of them were driven by strategic decisions, but many of them were driven by banks being in troubles and us being allowed or asked to be part of the solutions. Now, there's nothing wrong with that, but it cannot be just that part. So, but in that sense, I think that the real issue is not, there has to be a political desire to facilitate something like that. So, and it's not the reality of today. The good news is that, in my view, in many countries, there is a recognition that they want to protect their banks and their financial institutions as national champions, which is an implied or explicit recognition of their value for their economies. But the bad news is that they don't realize that in order to really be meaningful and go to the next level of their contribution in their economies, they would need to be also more competitive globally. And so, but without a banking union, without a capital market union, it's going to be very, very difficult for Europe to compete with the US large banks. And fundamentally, you all know that the economies are still relying in Europe to the banking sector for financing for 70% of the business, of the cases. In the US, it's the other way around. So we have a completely different playing field and lack of critical mass. So I hope I'm not I'm not so convinced it's going to happen soon, but I hope eventually one day those kind of mergers between larger banks will be allowed, and we can contribute to that by showing that it's possible. Now, in the meantime, I do think that in many countries, critical mass and synergies and value can be created by facilitating further rounds of local mergers.
Just for full clarity, I was offered my first job in 1988 by Warburgs. Didn't took it, I went to Kleinworts. So that was one of the UBS clients. It was an interesting career. In terms of, though, the ability of Europe to succeed, we've talked a little bit about banking mergers and too big to fail, and I'm sure that'll come up in the questions again as well. But you mentioned capital markets. Capital Markets Union, the ability to have European banking, integration. Are we a failed project in Europe? And I appreciate Switzerland is slightly divorced from what we're seeing in the European Union as well. But until we get better capital markets and better integration of the banking system, and we're still worried about supranational or international champions for country by country, we're never going to compete, are we?
I don't think it's realistic and possible to achieve that by simply with status quo. I think that what you can hope for is that you strengthen the existing stronger player by potentially allowing them to, as I say, do a domestic consolidation. At the same time, we have to also understand that a lot of what was traditionally part of the banking business is now migrating into the non-banking financial institution pot. So I mean, there is some disintermediation of banking going through, and if you are confronted with those kind of dynamics with a structural deficit like the one Europe is having vis-a-vis the US, it's going to be very hard to compete. So that's the reason why at UBS we believe we have a chance to compete, because we play rather a more specific role in Switzerland as the universal bank doing A to Z banking. Mm-hmm. But outside Switzerland, we are very focused. We are a global specialist in wealth management and asset management. We manage 5 trillion dollars of assets for clients. So 2/3 individuals, 1/3 institutional clients. And we have a focused investment bank that is working very closely with our corporate clients in Switzerland, but also very closely with our wealth management business. That's the only way you can try to compete, by being focused in some areas where you can excel. And as the only truly global wealth manager, it's a differentiating factor, but it's not easy to replicate and to scale up.
One more from me, then I'm going to open it up to the floor as well, so have a think. We've got policymakers in the room, leading businessmen and women as well, so please get involved in the questions. Just keep them to one question rather than 3 or 4 parters. That would be really helpful as well to get through as many as possible as well. Sergio, you're on a bit of a world tour at the moment. You're always on a bit of a world tour. I don't know a CEO who's got on less planes since COVID. Bearing in mind they all promised they weren't going to get on planes again. What is the world saying about UBS? What is it saying about European banking, where our speciality is, where our USP is, not just at UBS, but in European banking as well? You've just come back from an Asian tour as well. I know you're off to the States very soon as well.
No, look, I mean, first of all, I think it's a little bit self-serving, but, I still have to say that the reality is that, there is a clear benefit for us out of this situation, other than, the value that we can create for clients and shareholders, and eventually also to our people, because we can create a stronger proposition as an employer of choice. There is also an implied recognition by clients and stakeholders, major stakeholders, that being part of the solution over that weekend enhanced our profile and perception. And that's a very important matter in our competitive positions. The way people are seeing the European landscape is now they see it very interesting, because they see some banks now having a good momentum in terms of the turnaround and their ability to return capital. But of course, the question is fundamentally still the same: is this a tactical allocation, is a tactical momentum, or is a structural one. And I do believe that when you go into traditional banking, other than everything else I mentioned in terms of synergies and efficiencies on capital and cost, there is also one very important matter that if you need underlying economy to grow in order to sustain a banking business. If the underlying economy is not growing, it's very difficult to have a sound and compelling business model in banking. So therefore we need Europe, and we need, people are saying, okay, how far can European bank go in that profitability if the economy is not really growing? And when rates eventually may or may not come down, part of the profitability may be under pressure again. So that's a real question out there.
Questions for Sergio Ermotti? Gianluca Garbi has got the first question. Gianluca, where are you? And the floor is yours.
Yeah, I'm here. Thank you. Couple of questions. Isn't UBS too big for a small country like Switzerland? Second question, what do you think has been the responsibility of the supervisor, or what has happened? And third question, what do you think could be the responsibility of the monetary policy that had to increase interest rates so fast in such a short period of time, simply because they didn't see the inflation coming?
Well, so the first one, I have to say that, while I fully understand the questions around the size of UBS vis-a-vis the country, I mean, by the time we deleverage out non-core assets and rationalize also some aspect of balance sheet management, we're going to be around 35% larger in balance sheet terms than UBS was standalone. Is it higher? Yes. Is potentially risky? Yes. But it's not a fundamental change. Now, for me, it's very important to take in consideration at least two dynamics that are really a peculiarity of the Switzerland. Number one, Switzerland is punching well above its weight in many aspects of its economy and players. Banking is one of them. So pharma is another, food and innovation and so on and so forth. So it's nothing so extraordinary for us to be of such a large size compared to the GDP. And now, most importantly in terms of risk, what matters, at least for the more sophisticated observer, would be to also have a look at the kind of assets of balance sheet we have. When you look at in that case, we have 530 billion of risk-weighted assets. So instead of, and vis-a-vis a 1.6 plus trillions of balance sheet. Why? Is relevant because if you look through, 20% of the assets, 25% are mortgages, residential mortgages in Switzerland with very low loan to value. We have 15% of our balance sheet is liquidity. We have total loss absorbing capital of 200 billions, which is 4 times the amount of losses UBS had during the financial crisis, with 50% higher balance sheet. So in a nutshell, I think that while I'm not trying to play down any potential risk, if I look at many other advantages that we bring to Switzerland in terms of our contribution to the financial center, to the economies, the fact that we are the largest taxpayer in the country. When you measure how much taxes UBS and Credit Suisse have paid and are paying, and in addition our employees are paying Switzerland, we are the largest taxpayer in Switzerland. So there are a lot of benefits. The second questions, I skip it. I hope that investigating commissions will be allowed to discover who is truly responsible. To me, it's already crystal clear that the board, management, and shareholders failed over the years to understand and address the topic. All of the 3 of them, they bear the responsibilities. The shareholders as well, because they were just allowing these things to happen. in terms of the other stakeholders, I think each of them should really go through and analyze what happened. And hopefully, not certainly, they will also recognize that maybe something didn't go the right way. But I let the investigating commissions of the Parliament, hopefully in September, October, to release their reports, and then hopefully we can have a less emotional and a more fact-based discussions around that topic. The third one, look, was inevitable. Yes, of course, you can always say, but I don't think that central banks had any other choice. With that kind of inflations, they had to react that way. We knew that the QE and the monetary policies that were happening post-financial crisis and then were rolled on over the years in every jurisdictions were excessive potentially. And when we went into zero or negative rates environment, we had excesses. And that one day or the other, we would pay the price for that was inevitable. So I don't think that they had any other choice than react that way. Now, the real question will be to see, is this the right time to cut or not? Of course, the wish of everybody is that yes, but I don't think we can afford to make a mistake at this stage. That would be very costly. If inflation comes back and it goes, then it would be very hard to absorb for the system. So I think there are more qualified people than me to make a comment on that, but I still think that fighting the last 1% is going to be much harder than people think.
We have gone over. Thank you for your 3 questions. I'm pretty sure I asked for just one, but well done you. And then the next gentleman I'm loath to ask, because I know he said 1 question last night at the Ambrosetti Club, and he asked 3 as well. Just the one, Mr. Kamenov.
Sergio, I would prefer you stay still in Swiss Re, by the way. Very welcome. You know very well UniCredit. Do you think recently we can learn from them as well, from the present-day UBS position, particularly in the view of your idea for having European banks merging one day when the conditions are proper?
Look, I was very fortunate and happy to be part of that UniCredit story after they acquired Hypo Vereinsbank and de facto as well as Bank Austria with a network of presences in Europe and particularly in Eastern Europe, and that was a great visionary move that, by the way, allowed, I can say, allowed an Italian bank to basically save a German failing banks because nobody else wanted to buy, fix it, and also on Austrian banks. And by the time it was fixed, then the financial crisis did come, and the dream and the vision to create a pan-European player that would, over time, rely on the promise, on the political promise of a capital market union and a banking union to come was basically destroyed. From that moment onwards, that dream, that vision lost its interest, and it was a very painful exercise. Of course, some mistakes were also done from the part of the bank, but eventually having a complex network of banks under an holding umbrella was becoming more of a problem than an asset, particularly when liquidity and capital is trapped in every jurisdiction. And now what we need to do is to, of course, a lot of work has been done in the last few years and decades to change that and fix that. And now you see the benefits of that. But of course, we will see going forward how, to what extent European well-performing banks can go to the next level. That's I hope, is the case. By the way, we do welcome competition, sound competition that promotes growth in our industry and also highlight why banks are part of the solution. They are not a problem. If we want our economies to grow and to be successful, we need strong and successful and profitable banks.
Well-functioning banks are part of the solution, not the problem. We have to leave it there. 2023 was a defining moment, you say, in your UBS history. I think it's a defining moment in European banking for the foreseeable future. Sergio Ermotti, thank you very much indeed for your time today, sir.